Ladies and gentlemen, welcome to a new episode of the Fintech Hunting podcast. We have not one, but two amazing guests for you today. They are mortgage industry thought leaders, trailblazers, technology evangelists. Please help me welcome to the show Dawar Alimi, CEO and founder of LenderPrice, and Jay Promisco, president at Sierra Pacific Mortgage. Gentlemen, welcome to the show.
Hey, thanks for having us.
Thanks, Mike. Thanks for having us.
It is great to have you. Well, gentlemen, we're in the mortgage industry. It's May. There's some reports out, some doom and gloom, some good, some bright spots. Give me your perspective. Jay, we'll start with you. Kind of where do you see the current market conditions and what should we expect as we dive into the rest of the spring buying season and into the fall?
Boy, there's a lot to unpack there, Michael. I was just at Housing Wire. They asked me what I thought, and it reminded me of a gladiator scene when Russell Crowe is killing like 12 people, and then he goes, "What, are you not entertained? What else do you want here?" Be blunt, it's been the hardest 3 years of probably any mortgage banker's career. And you can go back 40 years on this, and we've had bad markets, but we haven't seen them last this long. Last year there was a bunch of people using hope as their strategy, and I think they got it wrong. And we're not out of the woods yet because there's still, we had some good data come out today finally. Mortgage rates this week have been much better, but we have a very vibrant housing economy right now, and we still, for whatever reason, still seeing 6 to 10% appreciation in homes, even after the rates went up. And so it's a little confusing at best to decide what is this going to look like next year at this time, right? And the Fed has, you can say whatever you want about Jerome Powell, but he's inherited a mess. We've had two administrations that printed just ungodly amounts of money, and we're paying for it now. It's just part of the drill. I think, the spring and summer look like they're going to be fairly active, but we've got a winter coming. And so a lot of companies need to prepare for that as well. But I'm not overly positive, or I'm positive, but not, we could be in this environment for another 12 to 18 months. So
great insights. I appreciate that. Dawar, give me your perspective.
Well, I guess I'll give you a perspective on the technology side. I think that, lenders are looking for solutions out there. They've had to deal with legacy solutions for decades, and they're trying to see if there's any modern solutions that are cost effective that's cheaper. So I think that we're still seeing the cost of loan increase, and we've heard it time and time again that technology is going to decrease it, and it really hasn't. It's like we keep hearing that. But I think that if there's ways that lenders can squeeze every basis point, every margin that they can get out of a loan, they'll do that. But it's hard in this market, as Jay just noted.
So Jay, how does technology help address these type of market conditions? What are lenders looking for in a technology partner and provider?
Yeah, that's a great question, because to Dawar's point, you can put a graph on cost to originate over the last 15 years, and it costs more today than it did when we were using transboxes and paper files.
I remember transboxes.
Yeah, and so no doubt, and our underwriters were more productive and a lot of those things. And so there was a lot of hope that technology would come in and fix a number of your issues. And I think lenders, now there's a bunch of tech out there that does help you. I'm partners with LenderPrice, and they do a wonderful job for us. But where I think companies got it wrong is the shiny object syndrome. And so you start bolting on stuff because one of your originators said they wanted it, and you keep adding $50 every time somebody pushes a button. And then frankly, some of this isn't tech's problem, it's the industry's problem with, the credit report fees. And then we've got this mafia of Work Number that sits there and costs companies a ton of money, with the hope of getting rep and warrant relief and all these things. But I think that there's two factors when we look for a partner that's going to be a technology. We're on our own proprietary platform. We built our own LOS because we didn't want to get tied to one of these long-term per loan contracts with some of the big box LOSs. But a vendor's got to do one of two things. They either have to create revenue for you or they've got to lower your cost to originate. One of those two things and those two things only. If it's, I want this technology because it feels good, it's probably a mistake, right? Because all it's going to do is add expense. You're not going to get an additional revenue component, and you're certainly not going to cut expense by adding a vendor. So
Great insights there, Jay. Dawar, how do you approach delivering technology to lenders in this type of market? How do you find the right price structures? And more importantly, how do you add that value?
Well, I think number one, you've got to work with lenders in today's market, right? I mean, we've got clients that have downsized and they come back and they said, what can you do for us? And we work with them. I think with Jay, when he was tasked with, hey, we're going to sunset this technology, the pricing engine, and you've got to make a decision as to what you want to do. He came to me and he goes, hey, Dawar, I want to make sure that if we go with you, that you're going to be able to get us up and running. Because, I think that's a constant complaint that lenders have is, is this vendor going to get me up and running on time? Is this vendor going to sell me vaporware? Do they have the features and functionality that, that I need? And for us, it was, like Jay said, they have their own proprietary LOS, and they wanted a solution, APIs that they can use. And then, we gave them access to our APIs. Their tech team evaluated it, and they felt comfortable. But even after that, what's interesting is that I think vendors will say, "Hey, well, we can do everything." And look, we had to even though we've been in this industry for close to 10 years now, we feel that our APIs have matured. I can tell you, there's never a lender that we've had that hasn't looked at our technology, that hasn't looked at APIs. And if any vendor says that they have everything, they're lying. That'll look at something and go, we do things a little bit different. I know that your APIs provides this data this way, but I need it this other way. And we've got to, so we've got to accommodate and figure out how to help them. And that's what we do.
Great points, and we'll jump into APIs in a little bit. So Jay, since it's been mentioned, you work with LenderPrice. What has that experience been like?
Yeah, well, listen, for everybody on the podcast, like anybody that thinks that a tech deployment is going to go flawlessly, they're wrong, right? There's not one. And at my old firm, we deployed a Black Knight technology that took us 3 years and cost us unbelievable amounts of money, and it still didn't work. And so I guess the experience has been good in that, when I was talking to Dawar, I'm like, just be honest with me. Just tell me what's in here, right? Here's what's in here. Like, Dawar's not selling me red shoes when I want white shoes. He's like, listen, this is what we got. And take some time evaluating the API solution first, make sure both technology teams are talking, then make a second evaluation. Okay, well, here's some other stuff I'd like to have on there. Is that a today thing or is that a tomorrow thing? And Dawar's got was really helpful. Like, tell me not your roadmap for the next 6 months, but what's your 3 to 5, right? So if I'm going to spend all these resources, time, energy, effort, money deploying this, and we've had a couple other vendors that decided, halfway through the deployment that they're going to change direction and look, we're just going to be an Ellie Mae shop and now we don't need you anymore. So I think if you're evaluating a tech, they need to have a longer term view of things. And then clearly they need to be flexible, as in nobody on this phone knows what the industry is going to look like 2 years from now. Nobody does.
Right.
And things are going to evolve, and with AI and all these different things. So I want a partner that's going to be thinking forward, not just like, what's it look like today? And the experience with Dawar and his team has been great, because something will screw up and we'll call Dawar and his team and be like, hey, this is screwed up. He's like, I'm so sorry, we'll fix it. Right. And that's all a company wants. What we don't want is, we've had vendors before and they're like, oh, there's a problem. Great. We're going to send it to committee and we're going to talk to all the other users on the platform to see if this is a change they want to make. And that's a big mistake that vendors make, is trying to get, like Dawar said, every lender does it a little bit differently. And a lot of the bigger box vendors want you to do it their way. And that's not a sustainable option for us. So.
Excellent insights. And speaking of technology, Dawar, you guys have been at the forefront of pricing technology for what, almost a decade now. How does your platform and the underlying technology, how do you think it differentiates you out in the marketplace?
Yeah, but before I answer that, let me just add one thing that, and I know that Jay's heard me say this before, is that we say something at our company that says service trumps technology. As an engineer, I could tell you, like, I would love to say, hey, push technology, technology, technology. You've got vendors out there saying that they're the first, cloud native solution, and like, look, everything's in the cloud right now. Cloud native just means that you're in a microservice architecture. It's just marketing talk, right? But do you have good service? Do you back your technology with great service, right? So that's something that we live by here. For us, I think that we're fortunate enough because we've got a modern tech stack. And I think that helps us in terms of being there for our clients whenever they have different wants and needs. So if they look at our APIs, if they look at a feature functionality, if it's not exactly what they want, they come back and say, well, can you change this up a little bit? And we can do that. And you can do that with a modern tech stack. You can't do that with something that's, older. For us, it really comes down to the word of flexibility. I know Jay used this. It's a flexible front end and a flexible back end. Now, Jay uses our APIs. He's got his own front end. But for those that use our front end, they can actually create their own UI and they could have the user experience that they want. And on the back end, it's really, I need something flexible because, with products changing and lenders looking at, nowadays they're looking at non-QM, they're looking at home equity. Can I quickly deploy this program? How easy is your back end for me to use to deploy this program? One of the things that Sierra uses is our base price solution called BIPS. When we developed that solution, we thought that we had everything. Lonnie and Jay's team came in and said, "Look, we love everything that you have here, but we need a change. We need these changes. And then can you accommodate these changes?" And we did.
Excellent. And Jay, you read all these articles out there in the mortgage press right now, how important it is to have a diverse range of products. There's varying borrower needs. Dawar mentioned non-QM, home equity, and everything like that. What are some of the products in the market now that are moving the needle? Where are lenders making some hay with some of the products that are working, and where should more lenders focus their attention?
Yeah, fresh off of Housing Wire, Stan Middleman nailed it. You know what's knocking it out of the park? A 30-year fixed mortgage. That's it. And there's probably some revenue opportunities in some of the other alt products. So I mean, there's a space for non-QM for sure, whether it's bank statements or DSCR. There's certainly a place for home equity in this market. Absent that, tell me what else. There is no. And here, our company looks at it a different way. If I went and tried to do everything out there, so I had this wide, array of products, guess what? I'm going to screw up all of them. And so you have to decide what you want to sell, because in my past, we've tried to do everything and you end up with a problem, right? And so I think companies need to decide you can't be everything to everybody. 90% of the market is 30-year fixed, government and conventional loans. Probably 10 to 15% is maybe jumbo and non-QM. That's it. And then there's the home equity stack, which is a totally different animal. But and thinking forward, what we're going to issue all this home equity right now, and rates drop down here a year or two from now. Guess what's going to happen? We're not going to be selling home equity anymore. So we're going to be doing a whole bunch of rate and term refi. So for me, product diversity, I guess you need to do some things, but and it's the same thing. I'm around the FICO component where I see companies like, listen, we need to be doing 500 FICOs. I'm like, what benefit is that providing the housing community? Not much. And you're putting borrowers in a bad situation and putting borrowers that probably should wait. And all you're doing is increasing the amount of buyers in the market when we already have a listing shortage. And so for us, product diversity, yes, but you got to be really good at the products you're going to sell.
Great insights there. And Dawar, how do you deliver a great customer experience, especially in today's market? What do you guys do to really work at delivering that experience for lenders?
I think, like I just noted, it's our configurable front end. So if it's a loan originator searching for a program, it's having the lender mirror the experience that their originators are comfortable with, and tying that with the programs that they want to offer. So it goes back to flexible front end and flexible back end.
Excellent. Jay, you mentioned HousingWire Gathering. I was there. It was a great event. There's a lot of other conferences coming up. Tell me kind of what are some of the conferences that you attend? What are you looking to get out of the conferences? And then I'll turn that over to Dawar as well.
Yeah, I went to Housing Wire because they had free dinner. That's why I went now. It's good. Listen, I'm not a big conference guy. I like to sit at my desk and get work done. I think conferences are important. Like I'll go to one of our vendors is Total Expert. I'll go to their user conference. I'll definitely go check that out. I'm not to get, this is not the place or podcast for this, but going to MBA and going to Western Secondary and doing all these things for us isn't in the cards for us right now. I think, to be blunt, the industry places, I mean, there's a time and place to get together and talk about, the future of the industry, and there's a time to get work done. And so some of these conferences provide some value, some of them don't. For me personally, while you guys are at conference, I'll be sitting around trying to roll out new product. And so it's not bad. So,
Well, luckily you have a very flexible platform that allows you to do that.
yeah.
Dawar, tell me kind of your take on some of the conferences, because there is, a little bit different perspective as a vendor versus a lender, and some of the conferences that really you almost have to be at.
Yeah, I think Jay's right. I mean, there's some great conferences and some not so great conferences, right? It's like for me, I'd rather, if I don't have to go to a conference, I probably would rather avoid going to a conference. But in our business, just being a vendor, a technology vendor, you have to go to some of these conferences because that's where you see some of the clients. But I know lenders avoid vendors at conferences. So it's like, trying to get a hold of them is, that's half the battle. The next conference that I will be going to is probably New York Secondary, because we're a secondary, we're a product that's, that ties well with the New York Secondary Conference. I just don't like traveling from California to New York, I'll tell you that.
Yep.
But yeah, that's probably the next one I'll go to.
As we wind down, and you guys are welcome back anytime, we could talk for a few hours on all things mortgage and technology. Jay, what do you see for the rest of the year? What are kind of the hopes for the rest of the year and the start of next year? What are you looking for, and strategically, what should lenders be on the outlook for?
Yeah, I think if you've done the right things within your organization to make it through this far, kudos to you, right? Because there's a lot of people that didn't do the right things, or they were hesitant on making some tough decisions. For me, what everybody else is doing, I don't know. What I'm prepared, my organization, is what is it going to look like next year at this time, right? And what that means is getting my vendor stack exactly the way I want it, right? My way, not their way. I'm going to be focused on vendors again that can help me lower my cost, so that when this market does turn around and we can be more competitive, look, this margin compression thing isn't going away anytime soon. And so cost, uber alles. But I would encourage companies out there to evaluate every single vendor that they have in their firm. And it's a life-changing exercise for you, because you go, holy shoot, we're spending this money on this. I don't even know what this thing is, right? So for us, it's preparing for the future, aligning with vendors that are going to be good partners, and making it through the other side. Because on the other side of this thing, Michael, is this amazing, robust market with a whole bunch of professionals in the business place. Like, frankly, what's been good about this market is a whole bunch of people that probably shouldn't be in the industry are no longer in the industry because they had to go find something else to do. What you're left with are, forward-thinking companies that are looking 3 to 5 years out, like what is this market going to look like? So for me, this has been a healthy environment to kind of level set the playing field. So
Well said, Jay. Thank you for that insight. Dawar, kind of what do you see for the rest of the year and the beginning of next year?
I think for us as as a technology company, is just getting better and better at what we do, just being there for our clients, figuring out innovative ways to make things easier, less costly. Um, we are looking at various I hate using the word AI because it can get kind of crazy in terms of like what you think you can do. I mean, there's data privacy issues. There's all kinds of things that when it comes to AI, you really have to be careful about. But it's really looking at using analytics and ways to get our lenders to squeeze as much margin as they can using our solution.
Fantastic. Gentlemen, great insights. I can't thank you enough for being guests on this episode of the Fintech Hunting Podcast.
awesome. Thank you, Michael.
Great. Thanks, Michael.